Hello and welcome. You're watching Ask Profit. I'm Mahima Vachrajani and with me is Alex Matthew. Today, we're going to take a quick look at a new IPO that is Glen Industries from the SME space that we're going to talk about. It's a very interesting company because it's into sustainable packaging and they've started this since 2019. It's a B2B manufacturer and manufactures eco-friendly recyclable food service packaging products. So that includes your PLA straws, your food containers, your paper straw, etc. And they provide these, sustainable packaging to QSRs plus HoReCa, beverage industry and the dairy industry as well. To take this conversation ahead, and of course, this is a fresh issue of 63 odd crores. And to take this conversation ahead, we are joined by Lalit Agrawal, Chairman and Promoter and Director of Glen Industries, who's joining us now. Mr. Agrawal, hi, a very good morning to you. Before I move on to company-specific questions, Mr. Agrawal, your quick take on why this fundraising of 63 crores and how will you be putting that to use?
Why this fundraising of 63 crore is basically to fund our new project. Most of it will go into setting up a new facility, which is costing about 100 crore, and 50 crore we will raise by way of term loan, and balance is from the equity.
So, Agrawal, go ahead.
Yeah, now this new project is mainly to manufacture again the similar type of products, injection molded and thermoformed thin wall food containers, as well as paper-based packaging for the food packaging. So all in the sustainable space.
And just to give viewers a perspective, what is the capacity right now that you have combined for all your, capex that you have right now? And considering that this new facility will also be introduced, what's the kind of capacity that will raise and what are the utilizations looking like?
Yeah, right now we have capacity for thin wall food container about 665 metric ton per month. And for the straw, paper straw is about 110 metric ton per month, and for PLA straw is about 120 metric ton per month. Okay. And when we set up the new facility, we'll be almost multiplying the food container capacity from 665, it will go to almost 1900, 2000 metric ton per month. And in the paper, one more in the paper space, we'll be expanding in around a capacity of 700 to 750 metric ton per month.
Okay, and when do you think this will be operational?
We are targeting for next January 26.
Okay. Mr. Agrawal, just want to get a sense on your financials as well. It's been a good growth where it comes to the FY24 numbers as compared to FY25, 18% growth in terms of revenue, good profit growth of 125%. Just want to get a sense from a longer term perspective, what is the kind of growth that you're penciling in for your top line as well as your bottom line? Because I was just reading up a note which said that QSR industry as a whole is expected to grow at a double-digit CAGR in the next 5 to 7 years, and that will probably, augur growth for your business as well.
Yes, we are very true. That is the trigger point for the growth of our company. And as far as the top line is concerned, we believe that after new facility setup, we'll be multiplying our turnover. From the presently, we did 170 crore. In the current year, maybe around 200 we will do. And after a new setup is in operations, it will be almost 2.5 times of that.
Okay, Mr. Agrawal, thank you so much for giving us that perspective and all the best for the IPO. All right, so that's with regards to where Glen Industries stand. But Alex, with respect to where markets are concerned, I think it's a flat day of trade. The Nifty 50 not doing much. Your broader markets slightly under pressure, but overall markets are silent.
Markets are silent, markets are quiet, you name it. There are various adjectives that you can use at this point. Range bound is another. And take a look at that chart, it's pretty much flat. Yesterday, of course, the Nifty 50 ending unchanged, and this is on the back of low volumes. Even at this stage, as I look at the Nifty 50 volumes, they're at 0.14 times the 30-day average. So, of course, it will build over the course of the session, but I would hazard a guess to say that you will have another session in a row where you have slightly lower volumes. And there's a lot of uncertainty globally that is pervading, and I guess to a certain extent one can argue that the lack of a trade deal between the US and India is one of the factors. There's also this overarching cloud about the uncertainty about Jane Street and how that is being treated. There was a response that you got earlier on, and we will continue to talk about the implications there. But really, the volumes are a little bit low, to say the very least. But take a look at the benchmark, and some of the constituents are moving. You have individual stocks that are in focus today on the back of big corporate announcements or updates. And this is quarterly updates from Kotak Mahindra Bank on the one side, which is very positive, and the big loser on the Nifty 50 Titan is faltering in trade because of a not so pretty picture. And you want to very quickly talk about it?
Yeah, I think the jewelry growth has been disappointing. You know, earlier also I pointed out saying that something like a Kalyan Jewellers has seen a growth of 31% in revenue, but Titan jewelry growth was only at 18%.
And the mix is not good also, right?
The mix is not good, and the street was expecting a growth of 22%. It has come at 18%, and I think valuations still don't look cheap for Titan, and that's why we're seeing the downtick in trade today. So down 5% because of that.
Another Tata company and stock that has gained tremendously and has been an outperformer, but is now losing ground because perhaps valuations are way ahead of expectations.
Absolutely, and margins is something that we'll have to watch out for, because that will be the only factor that could justify these valuations if they're able to sustain that 11 to 12% mark in the jewelry business.
On that note, so let's get our, by the way, if you've got questions on Titan or Kotak Mahindra Bank or any other stock for that matter, you can write to us on the number on the top of the screen. That is where you can send us a message, or you can call us on the landline number that you also see on the screen. Joining us today, we've got Swati Hodkar of Nirmal Bang, as well as Asta Jain of Hem Securities. Thank you so much to the both of you for joining in. Incidentally, we've got our first caller of the day. Dheeraj has been holding on. Dheeraj, thanks for your patience. Appreciate it. And how can we help you today? Dheeraj, can you hear me?
Good morning, sir.
Hi, good morning.
Sir. Yes, sir.
Please go ahead.
Good morning, sir. My query is regarding BSE, sir.
Okay.
I bought BSE 59 shares at 2579 at 2679 yesterday, sir.
Okay.
Can I add at lower levels, or is it a good stock to hold for the next 3 to 6 months?
Okay, that's a
or
good.
Should I exit from the counter? Is my query, sir.
That's a good question.
Or should I shift to something like TCS, or which are in a corrective phase? All the Tata group of stocks have corrected a lot.
Yeah.
So should I shift my money into that, or should I hold on to this?
Okay.
Or average this? What are the good levels?
I got your question. So Swati, on the chart, since it's a 3-month query, and this is a stock, one of the stocks that is reacting to this overarching concern about implications of this Jane Street order. Is there another entity that is now being investigated? How large could this entire thing be? And so from that perspective, it's under a little bit of pressure. There are news-based events that are causing this. What levels should he watch out for? Where should he draw the line in terms of his stop loss? And should he hold on?
First of all, good morning, all of you. The view is a bit cautious on the BSE front, because why the counter today has given the breakdown of the 50 days moving average, which was coming at around 2560 levels. On intraday basis, it has given the breakdown. Now we need to keep an eye on whether it's maintaining a negative closing on the today basis or not. If yes, then the selling pressure is likely to be continued, and Alex, this might counter will come down towards at least 2400 to 2380 levels. Up to that level, we might witness some sort of a corrections. Positive momentum cannot be seen unless and until it doesn't give the breakout of 2650 levels on the higher side. So my view is a little bit cautious. If you want to add on the quantity in this particular stock, I will suggest to wait for some more time. If the stock comes down towards the 2400 or 2380 level, that level will be the attractive levels to take a fresh long positions, but not at the current market price. So you should wait for some more of deeps on if you want to take a buy call on the downside.
Okay, so that's with regards to where BSE stands. Our next question is from Ramesh, who's writing in from Hyderabad. He says that he would like to invest 1 lakh each in Anantra as well as ITC Hotel at the current market price from a longer term investment, and wants to know from a longer term perspective or view. Asa, hi, good morning to you, and I'll come to you on this one. Anantraj and ITC, what's the view like?
Hi, good morning to everyone out there. So we believe that Anantraj is looking good in the longer term perspective, but right now my idea is to wait for some more dips to arrive in and then make an entry into this counter, because what we believe, we are just going through all sort of Q1 figures regarding the reality companies and whatever developments are coming in, I think that all are signaling good pre-sales number. So same can happen to Anantraj, but we really need to see exactly that is happening, and hence would like to wait for some more time. My idea is to make an entry at the lower level of around 520 to 515 odd levels. Regarding ITC hotels, this is looking good to us right now. I believe that hotel industry as a whole is going through a very good phase, and we believe that ITC hotels is one of the beneficiary among them. One can make entry into this counter at the present moment of time, but for Anantraj, I would like to recommend wait for some more time before making any sort of entry.
Okay, Anantraj, wait for some time. ITC hotels you can buy right now. But Asta, just out of curiosity, if you were to invest 2 lakh rupees right now, what would the counters be?
Because I believe that power sector is looking good to us. In fact, today also we are seeing some sort of momentum in the power stocks. So in that space, we are very much positive on the counters like Voltam transformer, although it is not pure power play counter, but I believe that is very good. So Voltam is looking very good to us, and we are recommending it to our clients as well for the possible target of 10,000 and above. So first counter is that. Secondly, we are liking Hexaware Technologies in the IT space. I think that is one of the counter which after the IPO listing has not performed that strongly, but I believe there is more steam in this counter. So Hexaware is another choice with a price target of again 1,000 in this counter. So these two are some of the counters which we are finding attractive to play long-term bets on.
Voltamp and Hexaware Tech are the picks that Asta would, go ahead and buy. All right, our next caller, Pradeep, is calling in from Bengaluru. Pradeep, hi, a very good morning to you. How can we help you today?
Very good morning to all of you. Ma'am, I am having 100 shares of Himadri Specialties.
Okay.
Bought at 415 rupees. I had expected this stock to go up quite because it is closely linked with, it's a proxy play to EV. So I just wanted to know whether for long term of, say, another 2 years, I would hold it or should I book profits?
Okay, got your question, Pradeep. I'll take this up with Asta. Asta, what's the view like for Himadri Specialty Chemicals and any other counter that you like in the specialty chemical space?
So yes, Navin Fluorine is looking very attractive. I think Navin Fluorine is one of the counter which today has also shown the momentum. Maybe the QIPs can be one of the reasons, but still that counter is looking very good to us. So Navin Fluorine is our preferred choice with the price target of around 50 to 100. Now talking about Himadri Specialty Chemical, what I am seeing in this stock is that stock is looking good to me because whatever profits they have posted is 38% growth, which they have posted in the bottom line of Q4 numbers of the year gone by, financial year gone by. But I would really like to see how it going to perform in the coming quarters. So for Himadri Chemical, just wait for some more downfall to come and then make entry. Meanwhile, I think the result season is also arrived only. So I think definitely we'll get the results also. So then there will be a better chance to make a good decision on this counter. But for Navin Fluorine, we are quite positive with a price target of 5,200 to 5,500.
Okay, the next question is coming in from Japan, believe it or not. This is, Alex from Japan, interesting. And Alex wants to know about Sagility. So I'm coming back to you on the fundamental outlook for this company. Asta, would you invest in this at this juncture? What is the potential upside?
So yes, Sagility, the day the IPO came, we were very positive. In fact, we have recommended to subscribe on this. And the most attractive point was that the issue price, because the ticket size always matters for the retail investors, and it was only rupees 30 stock. So yes, we had a good time to recommend this counter. Now talking about this, I think, yes, this is the counter which is again poised for some more returns from here. 45 to 48 are the immediate targets, because whatever we have seen is that they have shown a good growth in the mid-teen growths in FY25 number, and now going forward they are getting the benefit of the cross-selling of their products, as well as we have seen that there is a good reduction in their borrowings also. So looking after all the factors, the stock is looking good to us. Yes, one can invest in this counter with a price target of 48 to 50 in the longer term.
All right, our next caller is Raghuveer, who's calling us from Bengaluru. Raghuveer, very good morning to you. How can we help you today?
2400 से रहे पकड़ परम था.
Okay.
320 में हम लिया था.
क्या बात है?
320 फर्स्ट प्राइस.
2020 में लिया था आपने, कोविड के बीच में?
21 में लिया था।
अच्छा,
21 में लिया था।
हाँ।
अच्छा, पिछले बार एक बार फोन किया था, अविनाश पर के पूछा था हमें।
हाँ,
अभी मैं परसों दो दिन के पहले 200 शेयर भेजा हूँ, 1750 में भेजा हूँ।
ओके।
उसके पहले 1416 में 800 शेयर भेजा हूँ।
ओके।
अभी 2400 शेयर मेरे पास है।
हाँ।
अभी नेक्स्ट टारगेट कितना, जैन के पास तो पूछना था हमें।
हाँ।
नेक्स्ट टारगेट कितना है, अभी कितना मैं बेच सकता हूँ?
अच्छा, आस्था जैन को पूछना है आपको?
2 साल रख सकता हूँ।
ओके, आपको फंडामेंटल व्यू चाहिए, मतलब आपको आस्था जैन को पूछना है ये सवाल?
हाँ सर, हाँ सर।
जी जी, ओके। तो आस्था, आपको ये सवाल है, उनको ये होल्ड करना चाहिए या जैसे कि वो कह रहे हैं वो प्रॉफिट बुक करते आए हैं, उनको होल्ड करना चाहिए या बुक करना चाहिए प्रॉफिट?
So regarding Wukhad, if you permit me, shall I answer in Hindi?
That is preferred, Astha, that is preferred. That is preferred, yes.
हाँ, तो नमस्कार सर। आपने बहुत अच्छा किया कि आप टाइम पे इस पे प्रॉफिट बुक करते गए, लेकिन मुझे ऐसा लगता है कि थोड़ा सा अभी प्रेजेंट अगर हम बात करें टाइम की, तो थोड़ा ये और अभी मोमेंटम डाउनसाइड का दिखा सकता है। लेकिन अगर आप अपना धैर्य बनाए रख सकते तो प्लीज इसको आप कंटिन्यू करें, अपनी होल्डिंग को। मुझे लगता है कि इसका जो नेक्स्ट पड़ाव आएगा वो इसे 1800 से 1900 तक आराम से लेके जाएगा। अब मैं फंडामेंटल्स की भी बात करूं तो जिस तरह से हम जानते हैं कि दवा बनाने की ये कंपनी है और इनका जो व्यापार है वो विश्व में काफी जगह फैला हुआ है, तकरीबन 12 जगहों पर इनका व्यापार फैला हुआ है और बहुत अच्छा, और इन्होंने विभिन्न तरीकों से, मतलब रीजन से इनका व्यापार आता है, तो एक ही जगह पूरा कंसंट्रेशन नहीं है, जो इनका सबसे पॉजिटिव पॉइंट है। नतीजे ठीक ठाक थे, नतीजों में कोई बहुत बढ़िया उछाल हमें देखने को नहीं मिला, लेकिन लॉन्ग टर्म के लिए, लंबे समय के लिए 1800 तक जाने की पूरी क्षमता रखता है। तो छोटे समय में देखें तो थोड़ा सा नीचे आ सकता है, अगर लंबे समय का ही नजरिया है तो सर बने रहें, 1800 से 2000 के भाव ये दिखाता हुआ नजर आएगा।
Wow, interesting. 18 से 2000 का भाव भी from longer term perspective possible है, is what Astha is saying. All right, Astha, thank you so much for that view. All right, the next question then, Satyanarayan is writing in from Vijayawada, Andhra Pradesh. He's got ASM Technologies, 100 odd shares bought at 2,500 a piece, and wants to continue to hold this from a longer term perspective of 3 odd years, and wants to know a view on this. Astha, I'll again have to come to you for this one. Not sure if you have this under your coverage, but ASM Technology, if yes, what's the view like?
Yes, it is not under our coverage, so I would not be able to comment on this.
No worries. I'll take this up with Swati then. Swati, ASM Technologies, what are the charts indicating?
Hey, Mahima, there is no such strong formations on the chart as such, but on the high side, it has a very crucial resistance of 2600 levels, 2700 levels, which is provided by its swing resistance levels. If it surpasses that level, then only we can see certain strong momentum towards to 2800, 2820 levels. Whereas on the downside, as of now, the immediate support lies at around 2580 levels. So as long as it holds that level, we can keep a hope that the strong stock might perform very well on the higher side. So as of now, I would suggest to hold on your particular stocks, but please try to maintain the strict stop loss of 2480 levels on the downside.
Okay, so that's the technical view with regards to where ASM Technology stands. All right, our next caller, Narendra, is calling in from Hyderabad. Narendra, hi, a very good morning to you. How can we help you today?
Yeah, hi team, good morning, and panel team everyone. So actually I have 2 points. So recently I bought 361 and Axis Gates. 361 around 20% I'm in profit, Axis Gates around 70%. So today's market, it's a little bit down. It's 4% is down, and 361. Axis Gates 2% is down. Okay. Can we hold or can we sell, or what is the process? Like this, apart from like I have like 5 lakhs as of now. Can we investment in this textile market? Like as of now, today's market is good in the textile.
So Narendra, I'll be able to take one question. You've given me 3 questions already. So the SOP is that you can ask us only 1 question. So you'll have to choose which question you want to get answered for, and then I'll take it up with the experts. So you have to make a choice now.
Yeah.
So which one would you choose?
Yeah, Axis Gates and 361.
Axis Gates and 361. Okay then, Narendra, I'll take this up with Astha quickly. Astha, what's the view like on Axis Gates and 361? He's already made investments there.
Yes, regarding excess Cade, actually we have done a coverage on this counter way back in December 2024. So Him Securities has released one report, and at that time it was only 586. So what we have seen a strong jump from there. Now this counter we are finding attractive because they have got the diversified offering along the aerospace and the other spaces also like defense, automotive, energy, etc. What we believe that the management guidance was very strong, and in fact management has guided for a strong growth in their revenue and with a CAGR growth of double digit. So overall excess Cade is looking very strong to us, and we still believe that there is a more upside left in the counter, but in the shorter term maybe some sort of cooling off can be seen. So long-term perspective is quite optimistic for this counter. Remain invested with a price target of 1800 to 2000 in the longer term, where the time period can range from 6 months to 1 year.
Okay, and a quick view on 361 as well. Would you hold on to that as well?
Yeah, 361 is again a hold from our side, but right now we don't want to recommend a fresh buying in this counter, looking after the kind of valuation, and we are seeing also the price momentum is on the downside. So overall, in the longer term, it is a hold, but in the short term, we would like to recommend that one should not make a fresh entry in this counter at these levels.
Got it. Swati, I'm coming to you on the next one. Manjunath from Bengaluru wants to know about Chennai Petro, which has been under a tad bit of pressure in the recent past. Yesterday it was down, if I'm not mistaken. The stock is up about 0.2% right now. He's bought at levels of 728, which is not too far away from the current market price. And he's planning to hold for only the next 3 to 6 months. What is the potential upside, and where would you put the stop loss?
Alex, I'm really positive on this particular counter because from the last 3 to 4 months, the stock has started showing a very positive trend from the lower level. This month, we have seen almost a gain of 8.5% till the date. As of now, the counter is trading in the high tops, high bottom formations. I believe that it has a very strong potential to reach up to 840 to 900 in the coming 4 to 6 months duration. So you can definitely hold on the long positions. Downside, it has a very good support at around 670, 680 levels. Unless and until it doesn't give the breakdown of that support levels, the view will remain a positive for a target of 840 to 800 level, 840 to 900 levels on the high side. So my view is positive on this particular counter.
Okay, positive on Chennai Petro is the view that Swati has with respect to where charts are concerned, of course. The next question is from Sandeep, who's writing in from Mumbai, and he's asking about Trident Limited. He's got 1,000 quantity bought at 46 rupees and wants to know if he can hold, average or exit. Asta, before I take up the question with regards to where Trident stands, your quick view on all of these textile companies. They've been buzzing today, and this is because of the entire tariff play, because right now Bangladesh is at 35% tariff, Indonesia at 32%, Vietnam at 20%, but Indian tariff rates are yet to be decided, although the last negotiation was at 26%, which was at a pause, of course. But if these tariffs are higher for all of these companies, which are major textile exports, it's beneficial for Indian textile exports for sure. What's the view there? And then, of course, your view on Trident Limited.
Yes, we are quite optimistic, and that's why we have also liking the Gokuldas exports. Although in the today's trading session, we have seen the stock is running like anything. But in the longer term, Gokuldas exports is still looking very solid to us with a price target of more than 1,050 to 1,100. Now, talking about Trident Limited, they have posted very strong set of numbers. The only problem is with the valuation, because they have moved ahead of the industry price to earning multiple of around 25, while their price to earning multiple is more than 30, I suppose. So the valuation is a major issue with the Trident. But we believe that on the basis of the kind of macro development which is happening, definitely all these textile stocks are poised to show more upside from here. So remain invested in this counter. In fact, the results they have posted for Q4 FY25 were also very strong. So overall, just on the basis of valuation, maybe the stock may not run as fast as other counters are, but still it has a potential to move till the level of 38, I suppose 35 to 38. So remain invested in this counter.
Can we pull up the Dixon share, please? If we can just pull that up and see what the ticket price is right now. It's 15,330. So Karthik from Hyderabad has got a sizable amount of dry powder lying available, and he's saying he wants to buy 5 or 6 shares of Dixon Tech for the short term, and he's wondering whether he can buy the current price. So given that it has such a high ticket price, the question to you, Swati, is would you buy this, or is there another better opportunity in your opinion for the short term?
Yeah, Alex, as of now, this counter is really doing very well from the last few weeks. If we look towards the weekly chart, the counter is on the verge of the formations of a W-shaped pattern, which gives an indication that on the technical front in the near-term future, we are likely to witness a very strong momentum rally. Today, the counter is down by almost a 0.5%, but I believe this is the very good levels to take a fresh bet as well, because it's well placed above the short-term moving averages, which gives the positive indications. Momentum indicators are also very positive. So at the current level, at least you can buy 50% of quantity, whatever you're planning to buy. Upside, it has a very good potential to reach up to 16,500 to 17,000 levels. So up to that level, I'm looking a positive rally on the high side. So it's definitely a buy call from my end.
Okay, buy for Dixon and probably half the quantity right now and then later buy on dips is the view that Swati has. All right, with that, it's time to slip into a very short break, but we'll be right back answering more queries on the other side, so do stay tuned.
That's huge. That is a biggie. It's out of it.
गोल्ड प्लस क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
Welcome back. You're watching Ask Profit, the show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing in your screen right now. All right, Jagdish is calling us from Bengaluru. Jagdish, hi, a very good morning to you. How can we help you?
Hi, good morning. So I subscribed this Hyundai Motors during the IPO, have about 98 allocation, bought at 1960.
Okay.
Wanted to know what is the medium to long-term view. Should I hold or should I sell it off and book some small profit here?
Okay, got your question, Jagdish. I'll take this up with Asta. Asta, he's been holding the Hyundai shares since the IPO time. What would you suggest? Should he book the 9,000 odd profit that he has, or should he continue to hold for further upside?
So if the time horizon is long term, definitely a hold is recommended. First of all, kudos to his patience, because I remember the time the IPO came, it was not able to perform strongly. It went below 1900 also, but now the stock has yielded results. My idea here is on the basis of the kind of management guidance we are seeing, because management is guiding about the growth of more than 5 to 10% in the FY26 numbers as well as in their top line. And they have a quite a strong portfolio of new launches, because for these auto companies, launches always play a very important role, and they have got a very strong portfolio of new launches by FY30. So although the time period is long, but still I believe that in the long term, this counter is well poised to move upwards from here, because this is a global company, and I believe that it will be there in the mutual funds portfolio. So definitely a hold is recommended from my side. Let the stock rise till the level of 22,200 to 2,300, and then again review a query. Right now, remain invested.
Okay, remain invested is a view on Hyundai, and hold on with the patience that you've displayed so far, and it will reward you. Parag Milk Products is the name of the counter we're talking about next. And Swati, this is a question for you. Neha from Bengaluru is asking this. She's saying that she's making 25% profits at this point, but she needs targets and a view for the next 2 to 3 months. So a stop loss from this point, and also the target that you would suggest.
Alex, my view is definitely positive, because after a long period of time, the stock has showing a performance on the daily as well as on the weekly charts. The interesting formation that it has given the breakouts of a rounding bottom formations and trading in the pattern of the high tops, high bottom formations. I believe that it has a very strong potential to reach up to 270 to 280 levels. So for the short term to medium term, the target lies at 270 levels. If you want to keep a profit stop loss, 220 is acting as a very strong support level. So by maintaining that as your profit stop loss, you can hold on your long positions for a target of 270 to 280 on the high side.
Okay, so considerable upside still available in Parag Milk from this point. Snigdha is calling us from Hyderabad. Snigdha, very good morning to you. How can we help you today?
Hi, good morning. So I have 4 lakhs of corpus, and I just want to invest on 2 stocks. One is Sun Pharma and the other one is TCS.
Okay.
So I just want to know, is this the correct level to, move into that stock?
And what is your time frame? When you say that you've got 4 lakhs to invest, you currently don't have any other shares, or do you want to add on?
No, I do.
Okay.
No, I don't have any shares of Sun Pharma and TCS.
But you want to add to your portfolio. I got it. So,
yes,
but what is the time frame that you have in
3
mind?
months.
Oh, 3 months. Okay.
3 months.
Swati, I'm coming to you on these 2 large cap stocks. Of course, TCS is going to be in focus on account of its earnings. I'm just wondering if you would suggest waiting for that to come through, because there could be quite a degree of volatility based on what is announced, and Sun Pharma.
Yes, Alex, you rightly pointed out that due to the results, upcoming results, we might witness some sort of a volatile trading session into this particular counters. The very good levels lies at between the 3,300 to 3,250. So those are the very strong support range for the TCS. So if you want to take a long positions, wait for some more time, and if you're getting any dips towards to 3,300 to 3,250 levels, that will be attractive level, and the risk reward ratio will be also favorable. The short term momentum targets will rise at around 3,550, 3,600. Up to that level, we can witness some sort of a pullback rallies. Coming towards the Sun Pharma, my view is a little bit cautious not to add the long positions at the current market price. This counter looks positive if it's getting a deep towards to 1,600 to 1,550. So those are the very strong support zone for the Sun Pharma. So wait for some more time, let the stock correct more, and if it's find out the supports nearby 1,550 to 1,600 range, then you can take a long positions. Upside is limited. Initial targets will lie at around 1,750. If it surpasses that level, then the trend will change and the counter will lead its rally towards to 1,900. So the view for a medium term for both the counters are a little bit cautious to negative. Hold for some more time, and if you're getting any dips, then you can definitely add on.
Okay, add-on dips for TCS is the view that Swati has. All right, the next question is from Rajiv Bhatia, who's writing in from Bengaluru. He's holding 590 odd shares of Thomas Cook at 176 and wants to know if he can hold or book losses at the moment. And this is from a very short term perspective, 15 or 30 odd days. Swati, I'll stick with you again for this. Thomas Cook, what are the charts indicating?
See, today we are witnessing a pullback rally in this particular stock because the counter has made a cluster formations of a support at around 152 to 155 levels. So as long as it holds that level, I believe it has a potential to lead a rally towards to 168 to 170 levels. So I will suggest to hold on this particular counter. Please maintain the strict stop loss of 154 rupees on a downside and carry your long positions. Immediate targets will be a 168 and beyond that level, 175 levels can be tested. So hold the long positions with the strict stop losses.
Got it. All right. We've got the next question from Palakkad in Kerala, and Murli's got this question. Genus Power and infrastructure. He's purchased 1,100 shares at a price of 1,250 rupees per share. And he's saying that despite the best results, quarterly and yearly, the share price has fallen. He says it's a good management, guidance and orders are in hand for the next 5 years. He's wondering why there is a significant loss, and it is a significant loss for him, Asta. He's sitting on a loss of nearly 10 lakh rupees. What should he do in your opinion?
So he's absolutely right. Results were fantastic because Q4 numbers were like, bottom line more than 100% up. In fact, what we have seen that yes, they have got a very, very strong order book as well. But what we believe that major issue might be with the valuations because it has already risen a lot. So that can one of the reason that we are not seeing this stock performing now. And let's wait for some more time. Let's wait for another quarterly results to come in. So meanwhile, our idea here is to stay invested in this counter till the next quarterly results arrive, and then again review your query in the show.
I'm not certain that Murali's gotten the, or at least maybe we're interpreting it wrong, because I've pulled up the max time frame for Genus Power and it has never been at 1,250 rupees per share, unless he's talking about a split that has occurred at some point or some other corporate action, but I don't think so. And so therefore, Murali, I would invite you to just check and let us know what the actual price is that you bought this share for. And so therefore that 9-10 lakh loss may not be appropriate. Let's go to the next one.
Okay, the next question then is from Neelam, who's writing from Jaipur. She's making a 35% profit in AU Small Finance Bank and wants to know the strategy and target for the next couple of months. Swati, I'll come to you on this one. What are the charts indicating for AU Small?
All the PSU banks are really doing very well because whatever the bank nifty rally we have seen in the past, all the larger caps has been participated, but the PSU has not taken a participation in those kind of rally. Now it is the PSU bank who will take a nifty on the higher side, bank nifty on the higher side. My view is definitely positive in this particular counter's downside. It has a very good support of at around 740, 750 levels. So as long as it holds that support levels, upside I'm looking for a target of 900 to 940 levels. So it's a hold from my end. If you want to keep a profit stop losses, you can hold on as long as it holds the support levels of a 750 on the downsides.
Okay. There's an interesting question from Lalita, who's writing in from Kerala. And Adore Welding, the name of the company is ADOR Welding. Asta, I was looking at what this company is because frankly I was uncertain. It is 1,885 crore market capitalization. Apparently it's involved in providing customized solutions for contracts related to refineries, oil and gas, petrochemicals and certain other sectors. So she's been holding this for a period of 10 years and she's got 209 shares. I'm just wondering if you have any view. I won't blame you if you don't, and if she should hold on.
In the past, we used to track, but right now we are not very much, into this company, so not able to comment on this.
Okay. So, I mean, she's been holding for a long time. So, what is the view on the charts? At least if we can provide that, Swati. Adore Welding is the name of the counter. It's currently trading at 1084.7.
Sure, Alex. The view is positive because from the last 2 to 3 months, we are continuously witnessing upward rising channel. The counter is trading in that formations. As of now, it's well placed about the short-term moving averages 20 DMA, which is a very positive indications. From the last 2 days, we are witnessing some sort of a selling process, which we cannot be denied as such because already we have seen a very strong rally from 800 to almost 1150. So the profit bookings cannot be denied, but it has a very good support at around 1032. So as long as it maintains that hold support levels on the closing basis, the view will remain a positive. I'm looking for a target of immediately back towards to 1150 to 1200 levels. So you may hold on the long positions by keeping the strict stop loss of 1050 rupees on the downside.
Okay, so that's with regards where Adore Welding stands. The next question is from Rohan, who's talking about LTTS. He's bought at 4405 a piece and has a target of 5458 and is willing to hold for the next 6 odd months. Should he revise his target or should he just exit is his question. Swati, again come to you on this one. What are the charts indicating?
As of now, from the last few 7 to 8 weeks, if we look towards the weekly chart, it is under the consolidation phase. It's trading within the range of 4200 to 4400 levels, not giving any clear idea about the directions. I believe the consolidation phase is likely to be extended, and it will come on in a positive directions once it manages to give the breakout of 4450 levels on the closing basis. We need a sustained on the closing basis as such. Then only we can see the upward rally towards to 4700 to 4750. So view is positive, but the short term period of time it is under the consolidation phase. If you want to hold it for at least minimum 6 to 8 months, then you can definitely hold on. Downside, it has a very good support of 4200 levels. So as long as holds that levels, the view will remain a positive.
Okay, Pakshal Jain from Bellary in Karnataka is asking this next question. AB Capital is a stock that he has identified, and he sees that based on the charts, it seems to be giving a multi-year breakout. Is that true, Swati? And he's looking at it over the course of the long term, which he's defined as 4 to 5 years. Could it be a multi-bagger in that time frame?
See, Alex, definitely the counter has given multi-year breakouts. We have seen levels of 2030, 40 in the 2010, and after that, even those levels has been tested in 2024. Now in 25, we have seen the breakout of those cluster resistance, but already the counter has given a rally from 160 to 270 levels. So for the shorter period of time, we may witness profit bookings, and the counter will likely to trade in the high tops, high bottom formations. Now we might witness some sort of a profit booking which might take a counter towards 250 levels, then again it will lead to the new high towards at least minimum target will be a 340 to 350. So if you have any longer positions of a lower levels, try to book your at least partial profits, because the counter is trading at a very much high levels. Even it's trading in the overbought zone, so we might attract some sort of a profit bookings at a higher level. So at least partial profits are recommended at the current market price, or another partial you can hold on by keeping a profit stop loss of a 250 for a target of 340 to 350 levels.
Okay, all right. Swapan is calling us from Kolkata and asking about a company that has flown into rough weather. Dream Folks is the name of the counter. Swapan, very good morning to you. How can we help you?
I want to know what should I do? It is continuously falling.
Yes. Okay. And when you bought it, did you buy it for the long term?
Yes.
Okay. I'm presuming that you have looked at the recent updates that the company has shared. It is said that it's certain projects that it had taken on for large private sector banks have been closed. You've seen that update, right?
Okay.
Okay.
What should I do now?
Yeah, let me ask
It is
Asta.
continuously falling.
Yes. Let me give Asta a chance to give you an opinion on this. Asta, the latest updates that it shared, it said that there would be material impact on account of the closure of the packages with ICICI Bank and with Axis, if I remember correctly. It's seen quite a bit of erosion. Should he hold on or should he exit?
So right now, yes, the news flow is not positive, but we are getting, in our daily times news flow from this counter, like some where before 10 days also, I suppose on June 18th also, probably a month, they have said that they have tied up with some other, corporates also. So, I mean, the news flow has continued to flow in this counter, but what we believe that it is not able to perform strongly. And yes, the financial performance has not been so great. So my idea here is to exit partially and to remain invested in the partial quantity. Let's wait for the results and then make a decision regarding the full exit. But right now, I recommend to exit partially from this counter.
Okay, partially exit from the counter is the view that Asta has on Dream Folks, considering everything that's going on around the company. All right, the next question is from Narsima Reddy, who's writing in from Hyderabad. He's saying that Reliance has appreciated 19% in the last 2 months and wants to go ahead and buy right now for short-term gains and wants to know if this is the right time to make an entry or not. Swati, do you think for the next 2 odd months, making entry into Reliance makes sense?
Yes, definitely. Reliance has given a very strong breakout of rounding bottom formations on the weekly chart. And the breakout was at around 1440 levels. And already we have seen 100 points move after such kind of a breakout. I will suggest to buy at the current market price always, but not 100%. At least 30-40% can be accumulated at the CMP. And if you're getting any deeps towards to 40-50, you can take again a bet on the buy side. Upside, I'm looking for a target of 1620 to 1740 levels on the downside. So view is definitely positive if you want to chase the rally by at least 30-40% at the current market price.
And let me ask you to repeat that again. Are you saying 30-40% from here?
Yes, the quantity, whatever the quantity is planned to buy. For example, 100 quantity, at least 30-40 shares he can buy at the current market.
Sorry. I thought you were talking about potential upside from this point. It took me a little bit by surprise because then we're talking about 28,000 on the Nifty 50. All right. All right. Anyway, so let's go to the next question. Varun from Dehradun has got CDSL at a price of 1615 and bought again at 1780. He's wondering whether to add more the current price of 1736 or thereabouts, or wait for more correction. What's the view on the charts, Swati?
My view is positive, Alex, but the only concern is today we are witnessing some sort of a profit booking and it's on the verge of giving the breakdown of 20 DMA, which is a little bit cautious point. So today's closing will play an important role. If it gives the breakdown of at least 17-20 levels on the downside, then more selling pressure is likely to be seen. So I will suggest to wait for some more time. If we witness a correction, then 1650 levels are the good levels to take a fresh long positions, but not at the current market price. And if the stock find out the reversals from the support levels on a higher side, I believe that if it gives the breakout of a 1770, then you can take a fresh long positions after the breakout. Upside, I'm looking for a target of at least 1900 to 1940. So the view is definitely positive. A breakout on either side will decide the short-term trend of this particular counter. So if you're finding any support zone on the downside, then you can take a long positions.
Okay, positive view on CDSL is what Swati is indicating. The next caller, Sidesh, is calling in from Bengaluru. Sidesh, hi, a very good morning to you. How can we help you today?
Yes, hi, good morning. So is it the right time to invest in Geo Finance? Recently I bought around 50k shares. I just wanted to know, is it the right time to invest in Geo Finance for a long term?
Okay, got your question, Sidesh. Asta, do you think that's the right thing to do, buying Geo Finance right now?
Yes, Geo Financial is looking very, very strong to us. So I think, yes, one can make a entry into this counter because what we believe that there are certain innovative products which this company will going to launch. In fact, rising interest income is also helping the company boosting good numbers, and they have taken certain strategic initiatives also. So overall, I think this counter is well poised to move more upside from here because one important point is that, in fact, the customer base has also tripled. So overall, this counter is looking good to us, recommending a buy for this counter with a price target of 350 to 375 at the initial levels.
Got it. Okay, so Ashok has got the next question, writing in from Bengaluru. Praj Industries is the name of the counter. He's bought at levels of 1,280. No. Okay, it's the other way around. Flip it. Okay, 450 is the buy price. He's got 1,283 quantity. So I can see how that might have gotten confused. So therefore, he's in the green, in fact. He bought at levels of 450. It's currently at 496. And he's wondering what the view is. Swati, on the charts, what's the view on Praj?
View is a bit cautious, Alex. I will suggest to book the partial profits at the current market price. Second partial, you can hold on by keeping a strict stop loss of 480 rupees on a downside because the counter is trading in the low top, low bottom formations and it's trading below the 20 DMA as well, which is a little bit cautious sign. So we might witness some sort of a selling pressure in this particular stock, which might take a counter towards to 470 to 460 levels as well. So that's why 50% can be booked at the CMP. Another half you can maintain the long positions by keeping a profit stop loss of a 480. Upside momentums can be seen only if it gives the breakout of 510, which is the previous swings low. So unless until it doesn't give the breakout of 510 levels on the high side, a positive move cannot be witnessed. So it's as of now, I will suggest to book your partial profits.
Okay, book partial profits for Praj Industries where technicals are concerned. The next question is for you again, Swati. Arun from Tamil Nadu is writing in. He's bought 1,000 odd shares of Kelton Tech at 122 a piece and wants to know the target price for the next 6 odd months. What are the charts indicating?
Yes, as of now, this particular counter is really doing very well from the last few weeks, Mahima. I believe it has a strong potential to up to 150 to 160 levels for a shorter period of time. So you can hold on your long positions. Downside, it has a very good support of 130. So by keeping that as a stop loss, you can hold on the long positions for immediate target of 150 levels.
Swati, sorry, I've gotten a clarification from Ashok, and he says that his buy price was not 450. It was in fact 690. And so therefore he's incurring a loss at this point. What is the advice? Does it change? You had initially said book partial profits. What would you suggest now?
I will suggest to hold on because at the current market price, you can't book so much losses. If we look to on a larger degree formations, the stock is under the consolidation phase on the weekly chart. So 480 is acting as a very crucial support levels. So as long as holds that levels, the view will remain a positive. On a higher side, as long as it doesn't give the breakout of 510 levels, a positive momentum cannot be seen. But for a longer term duration, I will suggest to hold on. If it manages to give the breakout of that levels, then definitely 550, 580 levels can be seen in the near term future. But you need to keep a patience and you should hold on the long positions because the counter is already trading nearby the oversold zone. So the downside risk is limited compared to the on the higher sides. So I will suggest to hold on for the longer period of time as well.
Okay, so that's with regards to where Praj Industries stands. The next question is from Ram Rao, who's writing in from Pune. He's holding 175 odd shares of Datamatics, bought at 53.8 a piece, and is saying that he's already sold around 25 odd shares about a year back at around 600 odd rupees. Wants to know as to what is the upside that is being seen on the charts from next 6 to 8 months perspective. Swati, Datamatics is the counter. 6 to 8 months, what's the target that you're penciling in?
My view is positive on this particular counter, Mahima, because on the weekly chart, the stock is on the verge of giving the symmetrical triangle formations breakout. And there is a lot of cluster resistance at around 680. I believe it has a potential to give the breakout. I'm preempting the breakout at the current market price. So you can hold on the long positions. If it manages to give the breakout of those levels, 800 to 850 levels can be seen in the near term future. So you should definitely hold on this particular counter. Downside, it has a very strong formation, or we can say the support it lies at around 600 levels. So as long as it holds that level, the view will remain a positive for immediate target of 800 rupees.
Okay, all right. The next caller is from Pune. Ranjana is calling us. Ranjana, namaskar. How can we help you today?
Yes, actually I'm holding a share of FCL Tech around 58 with an average price of 84 rupees.
Okay.
So I want to know whether I have an investment horizon of 6 months, whether I should invest more in this company.
Okay, okay. So congratulations, first of all, for making the profits that you have. Swati, she's got a 6-month time frame, bought at levels of 84. This is a stock that has gained quite considerably, but she's got 58 shares. Gains, therefore, are limited. Would you suggest booking out or adding more?
I will not suggest to add more at the current market price because the buying prices will come up. But definitely if you're getting any dips towards to 95 to 100 levels, those are very attractive levels because the counter is on the formations of the flag pattern. It's on the verge of giving the breakout. Upside, I'm looking for a target of 130 to 140 levels on the higher side. So you can definitely hold on your long position. If you want to add the quantity, let the stock find out a support back towards 200 to 95 levels. Those are the very attractive levels to take a fresh long positions. So it's a definitely hold from my end.
Okay. It's time now, ladies, to hit the rapid fire round, and you know what that means. We'll throw as many questions at you as possible over the course of 2 minutes. The first one is on Adani Energy, and we've got Satish, who's bought at levels of 1,250 rupees. He's asking whether to hold or sell. Swati, on the charts?
I will suggest to hold on this particular counter with a trailing stop loss of 860 levels. Upside, we can see the target of 940.
Okay, one more. Titan, coming at you. Swati, Dikshit is wondering whether to buy at the current market price for a period of 3 months, considering the drop of 5%.
No, I will not suggest to take a fresh long position. Fresh long positions can be added if stock finds a support at around 3,300 to 3,250. Those are the attractive levels to take a fresh long position. So, as of now, avoid.
Okay. Hero MotoCorp holding 50 shares at a price of 4,818. Prasenjit wants to know whether to hold for the long term. Asta?
Yes, a hold is recommended for this counter for the longer term. However, initial price target can be set at around 4,500 odd levels.
Okay. Prajwal Gowda wants to know about Techno Electric Engineering. He's bought 890 quantity. I'm not sure of the price, but he's looking for a long-term view. Should he add more at the current price? What's the view, Asta?
Long-term view is positive. Only problem is with the valuation, but the growth is very strong. So yes, buying is recommended for the price target of 1650 to 17.
Havels is the name of the counter. Mutuarasu from Madura is asking about this. He's bought at levels of 1520, which is very close to the current market price. Would you hold, Swati, at this point?
Yes, Alex, you can hold on by keeping a stop loss of 1480 on a downside. Immediate target will be a 1600 to 1640 levels on the high side.
Out Reddington, technical advice is being sought. Suman wants to know, view is for the very long term, 5 years. Would you buy this current price, Swati?
No, not at the current market price. If you're finding any dips towards to 270 to 250, those are very attractive levels. And upside target can be seen at least 440 to 500 levels.
Okay, Muiz wants to know long-term prospects for EID Parry. He defines that as 10 years. Asta, would you buy?
I would buy at the lower level of around 1040 to 1030, not at the current one.
Okay. Asta and Swati, thank you so much for joining us today. Incidentally, I'm told that we have answered 34 queries today over the course of the 1 hour that we have had Ask Profit. So thanks so much for answering all the questions that you have. Viewers, we're completely out of time. Hopefully, the 34 stocks that we have discussed have benefited you in some way. Do stay tuned. We've got lots lined up, starting with Know Your Company. That is up next. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
Hello and welcome. You're watching KYC. I'm Harsh Saita, and we've started to pick up on larger trends as well and discuss it with specific companies. And today is one such company. Could this possibly be a larger trend all the way through FY26 and beyond is really the question that we'll be asking. We're going to talk to a microfinance company or predominantly microfinance lending company. and we're going to talk about Satin Credit Care. Why is that so? That is the biggest question, of course, that we'll be asking today. Is the worst over? And if so, what are the trends looking like? Q1, we may not get specific guidance, of course, fully understand that because companies will be on silent period, but we've been able to manage to at least get a perspective as well. That will also go a long way in helping us understand where this goes in terms of opportunity in the microfinance space and whether investing in it is good at this point of time, whether you're finding bargain buys or not. So that's really the first question. The second one, they have exposure in southern facing states, Karnataka being one of them, Tamil Nadu being the other, and therefore are they reducing exposure there? Is credit quality improving in certain pockets? Is growth coming back? So all of those questions around concentration, because they do have a decently large concentration in some states, and that is the other thing that we'll be picking up. The third piece is with regard to rising competition in saturated markets. Now, mind you, everyone's gotten into microfinance in a big way. I'm not saying that microfinance is saturated, but there are certain markets which already look saturated. So is the low-hanging fruit over, or are we going to continue to see growth in the next cycle like the way we saw in the last? Has that at all changed is what I'd want to understand. The fourth one is macro tailwind visible? Recovery in rural, is that visible? Because that could well drive both asset quality, recoveries, as well as how growth kicks in going forward. So we'll try and understand both of those. Fifth piece is goals. FY26 guidance not disclosed. Unlikely that it will get disclosed either because we are still on silent period. But what is the goal like for FY27 and beyond? Let's cut out the clutter for FY26 maybe. Look at FY27 and beyond. What is the outlook looking like? And last one, is there over leveraging still in the system? If so, how much? And what are the bureau gaps like? Outside of this, of course, rate cuts. We'll try and understand what that and how that impacts someone like a Satin Credit Care, as well as how is growth impacting the industry as a whole. So we'll try and understand all of those macros. But let's first start off with what the company is all about. I'm not going to take too much time on this, but I'm going to try and keep it as detailed as possible at the same time. NBFC MFI is what this one is. It's basically a regulated lender in the microfinance space and has an NBFC MFI license, right? Again, not getting into the explanation of that, it lends mainly to low-income women through joint liability groups model, the JLG model. That's what it's called. And what exactly is it? I'll explain that very quickly. So what is the JLG model? Important to understand. A JLG or a joint liability group is a group of individuals who actually form this group to borrow money, right? So all of them will come together, borrow money, and the group guarantees each other's loans. So they know each other well, and they'll be a guarantor for the other's loans. Typically, it's individuals who may not qualify for your traditional loans, something like a secured loan, someone who already has a decent credit history. So both of those pockets of people would likely not qualify. And therefore, what will happen is you will opt for something like this, a joint liability group, where there is a lesser likelihood for lenders to be worried that they will default on their loans. Obviously, this cycle has shown otherwise, but at least that is the perception, and that reduces the risk to a certain extent that there is little doubt on. Who takes joint liability group loans? Well, it's small farmers, people who don't have, or rather there is a lack of credit history, people who need to be brought in financial inclusion. It also enhances social capital, but it's small farmers, entrepreneurs, individuals running small businesses. All of those people are essentially the group that is targeted when it comes to JLG. Now let's talk about the nature of joint liability group loans. And this will probably explain better as to what a JLG actually warrants. Each individual is responsible for the other's loan as well. So the other making the repayment, you're the guarantor for it. So that's one. Even if one member defaults, others are responsible for payment of the loan. Loans are offered without collateral, so you don't need an underlying collateral for opting for these loans, and it's typical for persons in similar businesses to make a group, and because they'll understand each other's businesses. But this also, of course, leaves you open to the risk that if that business were to be failing, then pretty much all the loans are exposed. It also, Satin in particular, is also diversified into other lending, because this is obviously slightly more risky. So the other lending they do is to housing, MSME, and they provide software as a service, but that's relatively smaller. So we'll probably talk very little to nothing about some of these things. But housing, MSME is large, and we'll talk about that. Around 1,700 odd crore of their loans are housing, MSME. Now let's talk about scale. Geographies. They are in 29 states and union territories. They are in 529 districts. They have around nearly 1,600 branches, 33.5 lakh customers, and the concentration will also come up on your screen. The top 4 states are 56% of the loans. The next 6 are 27%, and then the remaining 19 states are just 17% of the loans. So that's how really the loan mix is structured. Now let's talk about the type of loans that they give out, and that's how the loan mix is. It's microfinance predominant, 87%. Then you have housing finance, secured MSME and retail is just about 6%. And then there's a business book, which is relatively small. But broadly, it's these three. And if you club these two, it's roughly 1,700 crore, nearly, in terms of size. And that one is the one which is growing fast. That's what they're focusing in on. Now, let's talk about metrics. This is a lender, and therefore the metrics will obviously be slightly more nuanced. For those who have watched us will know. We'll start off with the income statement, the balance sheet, the asset quality, and the key metrics for lenders. We'll break that up in that fashion. Thereafter, we'll look at shareholding, street cred, street coverage, and valuations. And we'll evaluate the company on the basis of these parameters. Let's start off. Let's talk about the income statement. In terms of growth, well, it's been a decent 3-year CAGR. They've done around a 27.5% growth on the net interest income number. Your operating profit too has grown or ballooned 52%. So there's an OPEX play which is playing out on the numbers there with regard to where operating profit is concerned. Your provisioning has gone up, but it's also a tough cycle, and therefore this one is where all of the profit cyclicality will come from. Look at the profitability in FY24, look at the profitability in FY25, and what you'll see is that cyclicality comes in only when there is an asset quality issue or when there is expected credit loss, which actually translates to provisioning on the income statement. So that's how the income statement shapes up. We're giving this a thumbs up only from a perspective that there is definitely going to be some lumpiness in where credit costs are concerned, but your top line growth and your operating profit growth, plenty of levers to play both of those. Profitable nonetheless, and that's the only possible reason why we're giving this a thumbs up. So we'll give this a thumbs up for now. Let's look at the balance sheet now. And when you see the way in which the balance sheet has moved, we've not seen substantial growth over the last 2 years or so. From 9,000 crore odd in terms of AUM, the AUM has gone only to around 12.5 odd thousand crore. Now that's a decent growth, there's no doubt, but it's a 2-year CAGR that we're taking. So growth has come in, but would you want it to grow faster on a low base? Definitely. Also try and understand it's a bad cycle, and therefore growth has been curtailed to a certain extent. So that's the other thing at play. Now you look at FY23 and 24 and look at the growth there. Nearly 20%, right? Or rather over 20% growth, in fact nearly 30% growth there, and then thereafter you look at FY24 and FY25, there's just growth not visible. It's not even double-digit growth. So that's where some of the concerns start to crop up, that it's a highly cyclical business, but that's the nature of the business, and we'll talk a little bit about that going forward as well. You look at the capital adequacy, fairly healthy in that sense, above 25% across all 3 years. So no concerns with regard to where capital adequacy is concerned. Now let's talk about asset quality for a bit. You see how asset quality has moved over the last 3 years. This is basis the company presentation itself. So we've picked it up straight from there. There's plenty of movement with regard to your NPA ratios. there's no control over that. At least that's what it seems to suggest. We've given this a neutral only from a perspective that it's not ballooned in significant fashion. We've not seen your GNPA go above 5% or 6%. And therefore, we've given this a neutral. It's a bad cycle that it's been through for sure. Asset quality a concern for sure. So that's something that you want to keep on your radar. But that's the nature of the business. Again, that's what I'm trying to say. Microfinance by its very nature is that way. And if you're invested in it, that cyclicality is part of what you're invested in the business for. So, and that builds into valuations as well. So you want to keep in mind all of those factors when you're looking at this particular metric. Now let's talk about key metrics. And again, you'll see some bit of that cyclicality on the ROA. While the margins are fairly steady to a large extent, look at the ROA. Flat or rather near zero at FY23 levels, FY24 sharp rebound, and FY25 at 1.7%. So that's the nature of the business. When you're investing in something relating to microfinance, you'll get very good yields. So you're getting an 18.5 to around a 21% yield on your product, which you'll probably never get anywhere else. But look at the margins as well, nearly 11 to 13% on the margin count as well. So again, it's a very, very healthy margin. You won't see these kind of margins, especially in the NBFC space, in too many places. So what you want to therefore also judge is the fact that you will always have a better margin, but there will always be a credit cost built into the margin, which kind of will impact your ROA, and that the worry is the chunkiness of the credit cost that comes into the margin. It should not dilute your ROA to such an extent that it wavers so much, which is exactly what is happening. But again, to a large extent, that's the nature of the business. But you have to keep in mind that this is very, very high margin to try and build in for that credit cost. Lending is always a business where you have to take care of credit cost with the top line that you're making, and thereafter arrive at your ROA. And if you're able to do a decent ROA even in bad cycles, then that gives you leverage. So that's the way one needs to think of microfinance and lending in general as well. If there is very, very low credit cost on your lending, then of course your margins will be lower, right? And therefore it's a mix of those two, which you have to judge on the basis of. And look at the OPEX to assets as well. There's been a bit of a taper in FY24, which has aided the ROA. We've seen a bump up with regard to cost to assets as well, or rather OPEX to average AUM as well in FY25. So that's how we're looking at all the key metrics. It's a very, very neutral set of numbers that we're seeing. We've given this a neutral as well. More to wait and watch on with regard to consistency of performance. That's something I believe the markets will be looking out for. Let's look at shareholding pattern now. The promoter ownership is around 36%, around nearly 5% owned by FIs. They've sold a bit of stake in March of 25 in terms of that quarter. DIs have bought an equal amount, and the public holds the rest. It's a small company, sub 2,000 crore in market cap. So some things that you need to look out for. Now let's talk about street cred. Last 1 month returns is just 3%. 3 months is around 17%. 6 months is around 8% and the 1 year is negative 23%. So there's clear pain there, at least over the last year or so, for those who have invested over the last year. But you look at the last 5 years, it's a doubler. We've again given this one a neutral as well, because the last 5-year performance over the longer term, it's done okay. It's been a doubler in the last 5 years, and we're at the bottom end of the cycle almost, and we'll find that out obviously when we speak with management. Now let's talk about street coverage. There's one buy, there's one hold, there is no sells, 5% upside. One is there are very few people covering the stock, or very few analysts covering the stock. Second is the upside isn't not looking too attractive. Well, unless we get better information from management, we won't be able to understand exactly what is it that is being penciled in, which doesn't offer a decent upside. And if it doesn't, then maybe we stay away. What also we have to look for is valuations, and let's pull that up. Look at the way your price to book is currently. It's trading at 0.7 times current. It's trading at 0.6 times 1 year forward. This is basis the two analysts who have made forward projections, and you look at some of the others, this is looking likely the best among all the others in terms of valuations. But you must keep in mind that it's a smaller counter, point number one. It's got less coverage, and therefore the 1-year forward valuation may well get impacted. And point number three is that you want to be cautious in a tough credit cost environment. So all of those three factors, we've been cautious about this, given this a neutral. Let's quickly pull up all the metrics that we've just spoken about and try and sum it up. So income statement, balance sheet, asset quality, key metrics, shareholding, street cred, street coverage, and valuations. And that gets us a rating of 4 out of 8 on our KYC. But let's bring on board Mr. H.P. Singh, Chairman and Managing Director at Satin Credit Care, joining us live. Welcome, sir. It's a pleasure speaking with you. I want to first understand from you, how is the industry as a whole playing out? Is lending returning? Are you starting to see recoveries trickle through at all? Has the cycle bottomed? Is the worst over?
Oh, yeah, I think, if you look at the asset quality metrics, definitely, I think the worst is over. I think that's probably one positive statement which I would like to enumerate, When I say the worst is over, I probably say that the peak was somewhere last October, November. I think, from there on, I think the asset quality has improved, the collections have improved. And definitely, if you really look at it, the last half of a year, financial year is always very good in terms of microfinance, because the first half is very, very slow because rains, heat waves, and everything takes a toll on the disbursement and the collection. Now, having said that, I think for us, if you look at the entire landscape of the industry has not fared very well. And just to give us perspective, I think you explained it very well, and I was looking at that. The matrix, the income statement, everything which you probably brought out to be. We were probably one of the only institution which was 4 quarters in profit. If we give a complete landscape of the last 16 quarters, we've been profitable in the last 16 quarters. Now, that is probably one very big positive in the entire industry. So where we probably are able to see our institution as compared to the other institutions, I think we've been able to handle asset quality, we've been able to handle our credit costs, we've been able to handle our growth. In fact, we are probably one of the only company which would have grown 7% from the last year. If you look at the entire peer group of MFI, everybody has degrown. In fact, the degrowth is far more sharper for a lot of institutions. We in that even phase have grown by about 7%. So I think if you look at the complete mixture of asset quality as well as disbursement as well as our growth, I think we've performed, I think, the best in the entire industry. And that is what I can probably say it right now.
Point taken, Mr. Singh. So things definitely improving. So I know you have stayed away from giving guidance for FY26. Can I push you for a guidance on this forum in terms of growth for FY26? And I'm not talking Q1. Let me make it very, very clear. Growth guidance for FY26. And is there a credit cost guidance I can get for FY26? What's the thought? You've said it'll shrink from 4.5%. How much?
Yeah, I can give you a guidance. We are in the silent period, but the guidance will definitely come in. But the only thing which I can say is that it's going to be positive. Okay. That's probably a reply which I would like to place it on record right now. In terms of credit, our credit cost as well as our collections efficiencies, all put together, I think, we are at a place where we've actually, we've seen the peak happen probably last year. Now it's a way how we are able to really address that. And my sense is that, even the credit cost, which was about 4.6 to 4.7%, will definitely go down. That's for sure during this FY26, And that is probably two things, which I can put it on the table right now. Now, the guidance will come definitely. I think we said it that it'll come post the first quarter. I think it'll come at that point of time.
Sir, talk to us 3 years. what is the book size going to be maybe 2 to 3 years from now that there is better visibility, at least with regard to asset quality? Do you double book in 3 years? Is that a reasonable expectation?
Yeah, I think doubling a book is not what we want to really concentrate upon or look upon. For us, the biggest matrix is your asset quality. I think even if the growth is in, let's say the early teens as such, or whatever it is, I think for us, what is important is our asset quality good enough for us to generate an ROA of about 2.5% to 3%. That's what our final goal is. For us, growth will come because there is technically there's nothing which probably gives us any kind of a reason why we can't grow. We can grow, but the point is, can we grow in a fashion where our credit cost doesn't take a hit, where our GNPs don't go down, where our profitability is related to the ROA, which we really like to put. As I said, 2.5% to 3% ROA. And if I have probably, we have got I think a 6-year horizon, and this is, since we are a listed entity, you can probably see it, see the numbers of all across, 6 years on a trot, even in this cyclical, non-cyclical phases of our, we've maintained an average of about 2% ROA. And 2% ROA for a financial services company, and that too a microfinance company, where the cycles are very, very, very tough to really handle. Last 6 years, average ROA of 2%. I think that's a very huge statement, which I would like to say that, having a 6-year trot of 2% ROA, I think is fairly good for us.
So, Mr. Singh, what gives you the confidence to guide 2.5% to 3% ROA? Where's the kicker going to come from in the next 3 years?
The kicker is, again, since we were practically different from the other peer group, and when the credit cost has definitely hit, I think, double digits also for a lot of players, Over there, if we've been able to be, let's say, we are 2.5, 3 times better than, the peer group, I think, for us, when all this probably dies down, when the cyclical matrix will probably be on a stable level, I think, there for us, it's very easier in terms of our growth as well as our credit costs, as well as based on our asset quality, we'll be able to generate a 2.5% to 3% ROA. Along with that, I would also like to place on record that for us, I think, technology, we are probably one of the one of the institutions which has got a great fallback on technology. For us, technology is like the key. It's an enabler, definitely, yes, but we follow a lot of technology. That's the reason why we opened up our subsidiary, which is a technology company, because for us, we believe that the growth or the future probably for microfinance will also lie maybe to a large